There you go. Thank you, Karen, for the presentation, for the opportunity to present what we do. And so I was just sharing when we were off air there that we've been working with Karen we're going into our fourth year, and we've helped over 200 people demystify the market and learn in a very safe and very supportive environment. So what we do is we set up investment clubs. We teach people how to invest. We meet with them once a month on Zoom. They can invest as little as £100 a month or as much as they want. So there's no maximum upper limit. So I founded the company my journey began in 1993. So 31 years ago, I attended the Tony Robbins UPW Unleash the Power Within seminar. And at the end of that seminar, he suggested that might be interested in attending Wealth Mastery, which we then did. And Wealth Mastery was delivered by 24 of the wealthiest people at that time who had all learned to do significantly well in the stock market. And they'd shared their decades of knowledge and experience were distilled into 6 long typical Tony Robbins days where we were starting at 8 a.m., work right through till about 2 a.m. and fall into bed for 4 or 5 hours and get up again and go again. So even though it was a 7-day event, it was almost like a 21-day event in terms of content. And we did learn from the best investors in the world. And so at that particular time, like maybe some of you listened to the recording or here today, I had a day job. I worked for a salmon farm. I grew salmon professionally, and I was able to trade the stock market part-time alongside my day job. And after 2 years, I was in a position to be able to give up the day job and focus on this more initially part-time and then full-time. So I just set up one investment club because people that I knew thought I was crazy to give up a safe, secure, pensionable job, high salary, company car, etc. And I said, well, why don't we form an investment club? Meet once a month around a table. We used to meet in Jackson's Hotel in Ballybuffet in County Donegal. This is way before the time that you could trade online. So I just had a flip chart to explain the concept, and we used to have to ring the broker in New York to put in the trades. And then everything became online and became much easier. So one investment club in Donegal became 10, became over 100 in Ireland. And we've expanded into 50 different countries. We've initiated over 1,000 investment clubs in the last 25 years. We've written 7 books to explain different parts of the system. And we've got 27 years trading options and shares in the market. I'm probably the only person in Ireland that has actually sold an option every month for the last 27 years. Anna, who you heard earlier on this morning, is my partner both in life and in business, and is one of our top traders. So initially she helped us set up clubs in Spain, helped translate our information into Spanish. She's now runs her own podcast, Empowered Supernova, and she's an author of 10 books and has 11 years market experience. So let's get started. So this is going to be a little bit interactive. So in the chat there, if you want to type in, what is your relationship to money? What do I mean by that? If I was to put down in one word, money is. So if you could type in the chat there, please. When I say that, what is money? Go ahead and type in money is in the chat, and let's see what sort of. Go ahead, folks. Don't be shy. One word to describe money. So Karen says money is freedom. Money is like water to me. It's interesting, Bridget. I'll be interested to know what you mean about that. Anybody else? Go ahead. Money is. Don't be shy. Pat says money is time. Shane says money is freedom. Thanks, Pat. Good to see you, Pat. I haven't spoken in a long time. So what you can see straight away there, that everybody's got, that's the beauty about the human population, and as Anna was describing earlier with the IMA system, is that even though there's 8 billion people on the planet, Karen says money is energy. Some people would say an exchange of energy. So human beings have unique thoughts and unique perspectives, and so everybody, it doesn't matter whether we have 8 people on this call or 80 or 800 or 8,000 or 8 million, there's going to be many different versions of the same thing. So it's very important that you understand what money means to you. Some would say money is like a lover. What do we mean by that? If you do not pay attention to your lover, they will leave you. So if you choose now today to decide not to speak to your partner or significant other, not to acknowledge they even exist, to totally ignore them in the same room as you, just test it and see how long it would last before they would leave you. Money is exactly the same. If you don't pay attention to your money, it will leave you. It's very important. It's important to have a healthy relationship with money. The second thing is, what are your thoughts about the stock market? So again, if I said to you the stock market is, in one word, please type in the chat. What's your perspective of the stock market? The stock market is? Brendan says money is important. I know Brendan really well for 30 years. I know money is very important to Brendan. So Bridget says the stock market is confusing. Amanda says it's an opportunity, joy and opportunity. Shane is the stock market is very powerful. Karen says it's very fast. Karen says it's a crazy game. Yeah, Tony Robbins wrote a book called Money Master the Game. Anybody else want to say what the stock market means to them in one word? Pat, throw in your thoughts there as well. Peter says stock market is a gamble. Pat says it's educational. Absolutely, no 2 days are different in the stock market, and you learn every day is a school day in the stock market. Very good. Thank you for that feedback, folks. So, as I said, different people have got different perspectives. So, let's see what the perspective is of Tony Robbins, someone who we respect, has been the leader in the personal development industry for over 43 years now. And so he wrote a book in 2008. As we all know, a lot of people lost a lot of money due to the collapse of the banks, some of the significant institutions. And so Tony Robbins asked a question back in 2008. Well, if all these people are losing money, who's making money? And he went on a mission. It took him 4 years to interview 50 of the wealthiest people on the planet. And he then, in his book, Money Master the Game, he put the transcript of the interview that he had with the top 11 richest people in the world. And so he called it Money Master the Game. And then he said 7 simple steps to financial freedom. Then he wrote another book called Unshakable, which is a distillation of Money Master the Game. And he's just launched another book called The Holy Grail, which is going to be launched next month in February. You can pre-order it at the moment. But his thoughts about the stock market is your greatest risk to your financial future is not to be invested in the stock market, because he noticed that the 50 wealthiest people on the planet were all pure stock market players, and the 11 richest people in the book were all actively 100% focused on and actively in the stock market. So success leaves clues. Imagine you're an alien from another planet and you descended upon this planet and observed the 8 billion people running around the planet like ants and said, mirror, mirror on the wall, who's the richest of them all? And what do they do? Well, Tony did that. He discovered that they all do stock markets. So if you were a logical person, you would suggest, well, if the wealthiest people on the planet do stock market, then success leaves clues. So everybody must be doing it. And it's strange that very few people do the stock market. So that's Tony's books, Unshakable and Money Master the Game. So how can you make money grow? And as Anna said in her presentation, it's important you have a why. So if you won the lottery today, how would you live the rest of your life? Where would you live? What would you do? Who would you become? So again, let's have a bit of fun with this. If you want to type in the chat there, if I did a wire transfer into your account and I transferred $1 billion into your account, and you now know for the rest of your life you never need to work again, because if you've got $1 billion, you can spend 83,000 a month for 1,000 years, and you still would have. That's how long it would take you to spend $1 billion. So if you had $1 billion in your account right now, where would you live? What would you do, and who would you become? So Joy says she would be globetrotting. So obviously, travel is her passion. Travel the world, set up charities. That's beautiful. Karen says, "Go ahead, folks. Don't be shy. Where would you live? What would you do? Who would you become?" Bridget would live in Northern Ireland and she would travel. Peter would live in France and travel and set up charities. Beautiful. Thanks, Peter. Shane would become an international investor and travel. So he would do his passion, which is property, but he would do it internationally. Um, Femi would build his dream company. Interesting. There you go. So it's important you have a vision of your future self. All of the top investors that we study, they seem to have, from a very early age, a vision of where they want to end up. So one of the people that we look up to and study is Warren Buffett. Warren Buffett is the single most successful investor in the history of the world, and we go to his AGM most years and have been doing that for over 20 years. He sat down with his wife at a very early age. I think he was about 25 years of age, and he simply said, almost like a throwaway comment, "I will be the richest man in the world." So he created in his mind a future version of himself when he had very little money, and he did become the richest man in the world. And he's always in the top 10. Depends on the share price of Microsoft. Sometimes it might put Bill Gates in the top, or share price of Tesla. It might put um, Elon Musk in the top. But Warren Buffett, for the last certainly 10 or 20 years, has been in the top 10, sometimes the richest man in the world. But the point being is he just created that vision for himself. And he started a fund called the Berkshire Hathaway Fund in 1965. And at the very first AGM in 1965, 12 people showed up to the annual general meeting of their Berkshire Hathaway shareholder meeting. Today, if you want to go to his shareholder meeting, there's 50,000 people from all over the world pile into a sports stadium to listen to Warren Buffett at 94 years of age distill his decades of experience and wisdom into 7.5 hours of information. And Warren Buffett is still the sharpest mind on the planet when it comes to finances. And he can, with no notes and no preparation, he can take questions for 7.5 hours in front of 40,000 people and have more energy at the end of it than the beginning, and have everything in the top of his mind, and remembers everything. Go back to the 40s, 50s, and 60s, and knows everything about India, China, and the world when it comes to finance. So rather than be just an old person in an old people's home at age 94, wasting their life away, he's still top of his game. And his business partner, Charlie, who we lost there before Christmas, if he'd stayed alive, he would have been 100 on the 1st of January. Charlie was in full swing there in May of 2023, top of his game as well. So let's go to the next slide. And so this is our vision. We're living the dream. Myself and Anna, we get to travel the world. This is us meeting interesting people and traveling all over the world. And that's what somebody typed in the chat room there, I think, freedom. That's what money is for you. It gives you freedom. It gives you the ability to do what you want, when you want, with whomever you want, wherever you want, at any moment in time. And so we're not saying this to impress you. We're saying this to impress upon you that you can do this as well. When I met Anna 12 years ago, she was struggling financially and didn't know anything about the stock market. And now she's one of our top performing traders and adds massive value to our community. And that's another secret of success. Our vision now is to create 1 million millionaires over the next 30 years. Warren Buffett, it took him 60 years to create 1 million millionaires. The reason why it took Warren Buffett so long is his fund is just buy and hold, meaning that you buy the shares in his fund, you hold on to them long term, and eventually after decades you become a millionaire. With us, we have the ability to be able to rent our shares every month and generate an income. And so we are very confident that over the next 30 years, we're going to be able to create 1 million millionaires. And we've already helped a lot of people reach $1 million in our community. So success leaves clues. Once upon a time in 1942, and if you cast your mind back to 1942, it was right in the middle of the worst part of World War II. when the world looked like it was going into Armageddon. Millions of people were dying in World War. Most of the major nations had got involved in World War at that stage. At age 11, a little boy invested his first $110 in the stock market. He saved up his money from delivering newspapers and he invested all he had in 1942. And in 2021, he was worth 100 billion. And in 2023, he was worth 122 billion. So all you have to do is Google what is Warren Buffett worth. And in 2022, he made a total of 22 billion. But his journey has been up and down along the way. This is the graph of his performance. At age 14, he was worth $5,000. At age 30, he was worth $1 million. It took him 16 years to become a millionaire. At age 55, he was a billionaire. It took him another 25 years to become a billionaire. And today, like I say, if you Google him, he's worth over 120 billion. But you can see his journey's been up and down. And that's the secret of success in the stock market. That's why Tony Robbins wrote the book Unshakable. He meant that people have so much unshakable belief in the market that even when shares go down, they don't panic, they don't sell, they hold on for the long term. So you can see here, Warren Buffett went from 36 billion to 26 billion, so he lost 10 billion in this particular period of time from in the 70s. Remember, there's the oil crisis in the 70s. In the famous Black Monday crash in the stock market here, he went from 62 billion down to 37 billion. So if you do the maths there, he lost minus 25 billion. Here he went from 73 billion down to 61 billion. He lost, on paper, lost minus 12 billion. And so his journey has always been up and down, but the secret is he never gave up. He stayed steady and he continued to make money. And I bet if you put a microscope on this part of his journey, even though it looks flat now, it would have been up and down. Even if you went back here when he was 14 years of age, his journey would have been up and down. So the secret of success is that winners never quit and quitters never win. The secret of success in the stock market is the power of compound interest. And so success leaves clues. So Warren started a journey at age 11 and never gave up and became the richest man in the world. So talking about, linking back to what Anna was telling you, that Warren Buffett is a high green. Those of you that saw Anna's wonderful presentation about personality styles. What a high green is somebody who analyzes everything to death. They cross every T, they dot every I. They tend to be the architects, the accountants, the engineers in society. They're very anal on detail. So Warren Buffett studies and evaluates and analyzes opportunities before he makes a decision to buy. Charlie was the opposite. Charlie was a high red. High red is somebody who just deals in the headlines and the bottom line and is very decisive in nature. So Warren and Charlie were a very successful partnership because Warren did all the detailed analysis, but Charlie was the energy behind it. So he would say, for God's sake, Warren, enough of analysis, let's just do the deal. And so they worked very well as a team. We're very interested to see how they will acknowledge the passing of Charlie Munger when we go to Warren's AGM again this year, which will be on the 4th of May. So what is the power of what they've accumulated? If we were to give you £1 per second, if I was to stand in front of Pat Larry and take a pound or a euro out of my pocket, and every second, non-stop, I can't go to bed, I've got to stand in front of Pat for 12 days, 24 hours, and pass him £1 per second, or $1 in this example. I would have given Pat Larry $1 million after 12 days of solid $1 per second. If I wanted to give Pat Larry $1 billion, I would have to stand in front of him for 32 years, 24/7, no sleep, and transfer. Let's say Pat had a Revolut account and I had a Revolut account. I would have to press a mouse every second for the next 32 years before I could physically transfer $1 billion to Pat at a rate of $1 per second. If I wanted to transfer $1 trillion to Pat, it would take me 31,710 years. So when you hear the US government has a annual budget of 9 trillion, it just gives you an idea of how much money is floating around the US, and that you, anybody in this call today, or anybody listening to the recording, you can tap into all that wealth through your online account or through an investment club with us. In 2022, Buffett made $700 per second. So that translates to 2.5 million per hour and 60 million a day, based on something he started at age 11 with $110, a system that he designed and just kept repeating and repeating over time. So 1 billion means, this is Anna's book Empowered, and in her book she says 1 billion means that if you spent 1 million a day, sorry, 1 million a year, which is 83,000 a month, it would take you 1,000 years to spend $1 billion. And Warren Buffett has 122 of them. Numbers tell the real story. So if you want to take a snapshot of this link, you can go to the Berkshire Hathaway website. I strongly suggest you do. Warren Buffett, once a year, writes a very insightful letter. He spends a whole year putting together a brilliant letter. It's about typically 8 to 10 pages long, to tell his shareholders how things have been going in the Berkshire Hathaway fund. So from 1965 to 2022, the stock market has grown. That's the S&P 500, which is the top 500 companies in the world. It's like the Premier League of the markets. It has grown at 9.9% per year, so roughly 10% a year. So on a compound interest return, your money in the stock market, if you just buy the S&P 500, would have returned to you 24,708% since 1965. So you can be really lazy and just buy a thing called SPY. They call it the spiders. You just go to your online account, type in SPY, and by buying the SPY, you're buying a little bit of all of the top 500 companies in the world. And as Warren Buffett said, never bet against America, because they've grown on average 10% per year for the last, well, actually, you can go back to 1871. That's what they've been doing. However, Warren Buffett's Berkshire Hathaway fund has been growing 19.8% per year, so almost 20% per year. So with your simple mind, you might say, well, that's interesting. Warren Buffett does 2 times better than the stock market. Stock market on average does 10% a year growth. Warren Buffett on average does 20% a year. But by making that statement, he does 2 times better than the market, you don't understand compound interest, because he keeps it in and keeps compounding. So on a compounded interest return, he's done 3.787 million% return, which means over time he's done 153 times better than the stock market. So if you had invested £100 in 1965 in the stock market, today it's worth, or in 2022, it was worth 24,708. However, if you chose to invest £100 in the Berkshire Hathaway fund in 2022, today it's worth 3.7 million. That's the difference between 10% return a year and 20% return a year. That is the power of compound interest. So visually, if you look at it, just looking at 20 years, the blue bars represents a 10% return. The orange bars represent a 20% return. We tried to graph this over since 1965, and when we did, the blue bars became so insignificant you couldn't see them. So we just had to show 20 years to show the difference between 10% compound interest growth and 20% compound interest growth. If you think of it in images, those of you who are visual people, the little blue dot, if you look carefully under the word in images, look about an inch below in images, you can see a blue dot. That represents your £100 that you invested in 1965. In the stock market, it looks like this at 10% growth. In the Warren Buffett Berkshire Hathaway fund, it looks like this. So that helps you understand the difference between 20% return and 10% return. Well, that's all history. That's all interesting. What about now? What about giving yourself a financial blueprint to success, a financial plan? You've often heard the saying, if you fail to plan, you're planning to fail. If you just invested something as small as £200 per month at 2% growth per month, in 20 years' time, you'll be worth 1.1 million. So that's your plan, to be worth $1 million in 2043. If you're in a bit of a hurry, if you're a bit older, you can't wait 20 years. If you invest 400 a month at 4% per month, in 10 years' time, it'd be worth $1 million. So that's your 10-year plan to be worth $1 million. And how do you do that? The 3 simple steps to master the market. So the market will go up and down, which represents this white line going up and down on the gray background. And then the banister represents us. We're here to help you take your steps up the banister of success in the market. What are the 3 steps to success? It's really simple. Only do like the best investors in the world, like Warren Buffett. Only invest in the best quality companies in the world. So those of you that are into soccer, think of it as there are thousands of people that play soccer. There's the Sunday League, but the top soccer teams in the world play in the Premiership or the La Liga in Spain or the Bundesliga in Germany. And everybody on the planet knows that Barcelona, Real Madrid, Man City, Liverpool, Bayern Munich, they all know these are the top soccer teams on the planet. And so if you were to choose to invest in a soccer team, it would make sense to invest in the best soccer team in the world. The exact same is true of the stock market. If you're going to choose to participate in the stock market, it makes sense to invest in the best companies in the world. But the second secret of success is to be very patient and wait until they're great value, because shares always go up and down, and so you want to wait for the low points to invest. And this is the third thing that we do that Warren Buffett can't do because his fund is too big to do it. You rent your shares and reinvest the rent to buy more shares. So Warren Buffett and Charlie Munger in 1995 at their AGM, they were asked by somebody, where's the best place to get information on shares? And in 1995, when their Berkshire Hathaway fund was only worth 12 billion, now it's worth almost 600 billion. They said the best place to get information, independent, neutral, conservative information on companies is valueline.com. So if you actually take a screenshot and play this little video here, you'll see Warren Buffett in action speaking. In fact, let me just see if we can play that so you can see him in action. So let's just go and and you can all listen to the wisdom of the best investors in the planet. So we're going to go, why Value Line? Why should you use Value Line as your independent source of information to pick the best companies in the market? And we get the usual ads before we can start.
Hard to continue to.
So I'm going to just go straight to where he answers the question here. So to pre-frame this, he was asked, where do we get information from?
Site, I mean, you're reading a few hundred annual reports a year, and you've read Graham and Fisher and a few things. You'll soon see whether it kind of falls into place or not. Charlie?
Yeah, I think the set of numbers, the one set of numbers in America that are the best quick guide to measuring one business against another are the value line numbers.
I'd agree with that.
That stuff on the log scale paper going back 15 years, that is the best one-shot description of a lot of big businesses that exist in America. I can't imagine anybody being in the investment business involving common stocks without that thing on the shelf.
So there you go. Poor Charlie passed away there a few months ago. He would have been 100 on January 1st. And he's saying to you back in 1995 that if you want to be successful in the stock market, the place you go to get information that you can trust and is reliable is valueline.com. And that's what we use. This is where we get reliable information that helps us make decisions in the stock market. Valueline was founded in 1931, 92 years ago, or now 93 years ago. It details reports on the best 1,700 companies. There are thousands of companies in the world. I think it's about 40,000 companies available to you to invest in all of the different stock exchanges around the world, the Indian Stock Exchange, the Chinese Stock Exchange, the Australian, the Europeans, the English, etc. Even the Irish is a small stock exchange. But if you want to find out where the best companies are, you go to the Value Line report. So what we do in the Investment Club Network and what we do for you and what we teach you to do for yourself is we pick only the best 1% of those quality companies. And then we narrow, so we get rid of 99%, and then we narrow it down even further. We narrow it down to we get rid of 99.9%, and we focus on the best 0.1%. They're both quality based companies and good value. So here's an example of value line report. I know when you look at it now as a brand new person, you're going to say, what the hell? But this is exactly what Charlie Munger was talking about. This is a report on Disney Corporation. It's everything you need to know on the companies on one piece of paper. So everything you know going back from 2006 right the way up to 2023, but forecast out to 2020. At the moment 2028. So everything you need to know about the company is on one piece of paper, and it looks completely daunting, but after a while we can teach you how to be able to go in here and just extract the most important bits of information. So we need 7 things for quality. So we measure 7 quality parameters and 5 value-based parameters to come up with the best companies in the world. So it's a very simple system that we've refined over time. So there you go, 46,000 companies in the world. Value Line produce reports on the top 6,000, but then they narrow it down to the best 1,700. We take that from 46,000 to the 6,000 in Value Line, down to 300 quality, down to 100 quality plus price, and then that's what we use to invest in. So it's the creme de la creme de la creme, what we call the 4x4 companies. 4 for quality and 4 for value. That's our system we use. So basically what we do is we do a quality score. We look at 7 things. It must be in a good industry, experiencing growth. It must be the right time. It must be safe. It must have very low debt. We love to find companies that have no debt. It must be volatile, but not too volatile. It must have an excellent track record in sales and profit in the past 5 years, but it must also have a brilliant forecast for the next 5 years for both sales and earnings, and then it must have an excellent management team. And so the maximum score you can get is 52 out of 52. If you score greater than 40 out of 52, you get a score of 4 for quality. And so that will get rid of 99% of companies. So right now, if you put 99% of companies through this system, they would fail the test and would be outside the ideal range. It's only the best 1% of companies that are in the ideal range. And so that's step 1. Step 2 then is we look at the price score, the value for money score. So we look at the dividends that the company pays out divided by their profit that they make. We look at the price appreciation, the price growth of the share. We look at the sales compared to the profit. We look at the price divided by profit as a very simple but very powerful measurement of value for money. And then lastly, we look at the risk to reward share on this particular share. It must be 3 times more likely to rise than fall. So it must have a 3x growth potential compared to a -1 risk ratio. Again, maximum score 52 out of 52. Again, you got to score greater than 40 out of 52 to be ideal and score 4. And so that's what we mean by a 4x4 company. So right now there's only 50 4x4 companies in the world. So 99.9% of companies will fail this test. 99.9% of companies will be outside of the ideal range. Only the best 0.1% are to be found in the ideal range. So that's our 4x4 system. And you might say, well, how long have you been doing this 4x4 system and how is it done over time? So we've been using this 4x4 system since 2000. Well, on an amateur scale, we were actually using it since 1998. But in terms of we incorporated TICN, the Investment Club Network, in 2001, and since 2001, the stock market has grown 12.7% per annum, and cumulative, you would have grown your money 266% in the stock market since 2001. But the actual 4x4s, so the blue line represents the S&P 500, the orange line represents the 4x4 model. So if you bought all of the 4x4s and just held on to them without any income, just holding on to them, you would have done 5.6 times better than the market. So that's the overall long-term growth, but like everything in life, there's been many ups and downs, just like Warren Buffett's journey. So when the stock market recovered after the dot-com bubble, the stock market recovered 26%, the 4x4s recovered 49, almost 50%. When the stock market went down 38% in 2008, the 4x4s only went down 27%. When the stock market recovered 23% after 2008, the 4x4s recovered 62%. Same here. So that's why the 4x4 model does better than the S&P long term and does 5 times better than the stock market long term. So that's why some of our members panicked here and sold their shares and took a loss when they didn't need to, because those that were sensible just stayed on for the long-term growth and enjoyed tremendous recovery growth after the collapse of the stock market in 2008. So here's an example of what's possible. Here's one of our clients. We met this client he started investing in May 2020. He started with 500,000 here just to test our system. Then 3 months later, he put in 500,000 here, and then he put in 400,000 here. So it took him 7 months to accumulate 1.4 million with us. And after 13 months, we grew that to 3.2 million. And so he made 1.8 million profit, and very cash rich as well along the way. So the more money we have, the better we do over time. Here's some other examples we've had for you. So this client went from 379,000 to 1.1 million, 200,000% in 25 months, 8% a month. This client went from 77,000 to 227,000, 192% in 22 months, 8.7% a month. This client went from 672,000 to 933, 39% in 24 months, 1.6. And this client went from 385,000 to 864,000, 124% in 23 months, 5.4% a month. So you might say, why did this client do so little? Because in the beginning, they started out as an ordinary investment club with just £100 a month. And it was only the end they added the big money. So because they didn't have all of the money for all the time, they didn't do as well as the others who had all of the money in the beginning, or most of the money in the beginning. So right now on our website, we've just updated our results for 2023, 31st of December 2023. So let's take you to that.
Sort of have in your head.
So let me just take you to that. So you can go to our website, tisn.com. The reason it looks a bit retro, it's been around since 1998. It's our members support website. And when you go to the front page of it and you scroll down to the link here under the map of the world, it says TICN beats the clubs handsomely. We click on here and we show you a list of 50 different accounts. We have clients that are ordinary investment clubs that can barely afford 100 or 200 a month. We've got some income clubs that pay out a dividend every quarter. We've got consortiums where people put in lump sums. We've got corporate accounts. We've got many clients that are very good at making money in their core business, but they don't know how to make the money grow. So a lot of times we come across companies that have got big bank accounts and the money's just sitting in the bank account, not doing anything, losing value due to inflation. And we work with the corporations to help them make the money grow as well. We've got many personal clients, and there's an example of 2 pension accounts. And so the way to read this report when you go to a website is that the client started on this particular client started on the 15th of April 2019. They've been investing for 56 months. They've invested a total of 77,000. It's now worth 532,000. They've average amount invested because they put money on a drip fee basis 198,000. When they started on the 15th of April, the stock market was trading at 2,900. Now, when we produce this report on the 31st of December 2023, the stock market is trading at 4,769. So the stock market has grown by 1,864. The stock market has grown by 46%, but their particular account has grown by 168%. So they've beaten the market by 121%. So on average, the stock market has grown 24.5% in the 30 months average time that all of these investors have been investing. And we've beaten the stock market by 60.6%. The bottom line is our average growth across all of the different accounts is 4% per month. So remember that initial plan that you guys have, invest 400 a month every month for 10 years, grow to 4% a month. That will get you to 1 million. So that's your 10-year plan to become over 10 years. That's your 10-year plan to become a millionaire. And this represents, as Karen said, she's looking after 200 people. This represents, haven't added up, but I estimate about 2,000 people this report represents that are using our system. So let's explain to you how our people collect rent, because that's the real juice in what we do. It's one thing to be a long-term buy and hold investor. You'll do very well long-term, but that's like owning an empty property with no tenants and not collecting any rent. What we do actively in our clubs is every month we collect rent. What does it look like? So you can see here that the New York Stock Exchange has been around since 1792. But in 1973, the options market was invented about 50 years ago. So what we do is we buy shares in the New York Stock Exchange. We use those shares to sell options to generate an income. We then use that income to buy more shares. And those new shares are effectively free shares, go ahead and produce even more income, and we use that to buy even more shares. So we're using the power of compound interest. Like I say, 4% a month compound interest will, at £400 a month, after 10 years, you're worth $1 million. That's your plan to make $1 million in the next 10 years. So there's 3 simple steps to summarize what we've been showing you today. Step 1, only invest in the best companies in the world. Step 2, only invest in them when they're good value, they're the best price. And step 3, make sure they pay rent. By the way, of the thousands and thousands of shares in the stock market, 90% don't even do options and therefore don't pay you a rental income. It's only the top 10%, the best 10% of shares actually pay you an income. So again, in 1792, the New York Stock Exchange started. You buy shares there, you sell options, use those options to buy more shares, use those shares to sell more options, use those option income to buy more shares. So think of it this way. If you bought 1,000 shares in the stock market, and then with that 1,000 shares, you collected some income. And so what an option is, there's 2 types of options. One is a call option, which gives someone the option to call the shares off you. And so using the call option, you can generate some income. And that extra income allows you to buy an extra 100 shares. And so because you've now got extra shares, you can collect extra income. And because you've now used that extra income to buy more shares, because you've got extra shares, you can collect more income. So you create this compound interest wheel. It's like a compound interest machine that keeps reinvesting the income to buy more shares, keeps using the shares to collect more income. And so we do that not only with call options, we do that with put options, which are the opposite of call options. If you, instead of buying a share for $10 today, you can promise to buy it for $10 next month, and you get paid an income today to promise to buy shares in the future. So we've got shares that will grow long term. Yes, they'll go up and down, but they will grow long term. The 4x4 system has proven over 20 years that it will beat the market by a factor of 5. So you're going to make money from growth. You're going to make money from the call options. You're going to make money from the dividends. You're going to make money from the put options. And you continue to reinvest your income to buy more assets. Continue to use those assets to generate an income. Continue to use that income to buy more assets. So it's rinse and repeat. So we make money 4 ways in the stock market. We make money from the growth, which is called the price appreciation. We make money from the call option income. We make money from the dividends. And we make money from the puts. So we have different approaches to investing. You can invest as a club, where you put the same amount of money in. You meet once a month with us on Zoom. Everybody has an equal share, and TISN has a share in the club as well. you can invest in and you can do education to learn how to do it for yourself. You can become a self-empowered investor, use your investment club to learn how to do it for yourself. And that will take time because you've got to gain from experience in the club and gain from the education you learn. You can do consortiums, which is way more than 20 people. There's no limit to the amount of people we can have in a consortium. There's no limit to the amount of money. Again, over time, you learn the system. You can do it by yourself. You can come to us for the tools necessary to learn how to do it from yourself. So you can go through the education and the tools, and you can do it as a company. If you've more than 200,000, we work with you one-on-one as a company. Again, you can do it by yourself. You can be small, medium, or large. This is the last time we did the report on, this was a year ago, 30th of January 2023. Our average was 5.1%. But if anybody knows anything about the stock market has done nothing for the last 2 years. The stock market dropped 20% in 2022. The S&P did. The Nasdaq actually dropped minus 30%, 33%. So the S&P dropped minus 20% in 2022. It hasn't actually fully recovered, so it just got back up to where it was, or not even where it was. It's just slightly short of where it was. So we've had zero growth in the stock market since 1st of January 2022 to the 31st of December 2023. So we've had 2 years of no growth. We're very excited about this because the stock market on average does 10% per annum growth and has done since 1871. So we're effectively minus 20% in normal growth in the stock market. So long term, we expect some significant, what we call catch-up growth in the market. So that's the presentation. Let's open up for Q&A. So over to you, Karen, to chair the Q&A.
Unmute myself. Thank you, Owen. I love numbers, and I loved watching what you're putting together there. I'll ask the first question while everybody else is planning what they're going to ask. AI, how much is that impacting on the markets at the moment?
What artificial intelligence will do will speed up the whole process. If you ever come to Donegal and you visit the Glenveigh National Park, on that Glenveigh National Park, there's a castle that used to belong to an individual, and he made all his money from Tabasco sauce. So next time you're in a restaurant and you pick up the little Tabasco sauce, if you look in the bottle, it says McElhenny. McElhenny is from Carrigard, just about 5 minutes down the road from me here. McElhenny went to America and he invented the gas meter and he invented Tabasco sauce. But the point being is he lived the summer months in the castle in Donegal. He ran his whole global international business from the castle by writing letters. So you can imagine snail. You can imagine how long it took a letter to get to America on a boat back in the day. And so all that has happened in business is that now we can do things by email. It just speeds up the process. And so AI is only going to speed up the process. It's very exciting because the amount of time it's going to take you to make money is going to get quicker and quicker and quicker because human beings are going to become more efficient. Companies are going to become more efficient. So the stock market is going to go crazy. If you ever watch a futuristic movie, these futuristic movies with the self-driving cars and the flying cars, sometimes they actually play in the background, the radio or TV. And the Dow Jones today is now 2 million. Because that's exactly the way. You could have bought the Dow Jones back in 1916 when they were having the rebellion in O'Connell Street in Dublin in 1916. You could have bought the Dow Jones for $50. You would buy the top 30 companies in the world for $50. Today, if you want to buy the Dow Jones, it's $37,000. It's predicted to be worth $30,000 in 2030. But AI is so exciting, Karen. So it's going to press the fast forward button in everything we do.
Yeah, I'm using it in writing at the moment, and it certainly makes a huge difference. It does speed the process up.
Yeah, it's going to speed the amount of wealth we have available to share with everybody.
Thank you. Right, open. Anyone have a question they want to ask?
Yeah, I just have one general question, Karen.
Yeah.
Great presentation on that, was fantastic. Just a general question, would you have any sort of book recommendation? So if somebody's just looking to get started in the share market and stock market and things like that, foundational level.
Anna's book.
Oh yeah, okay, My First Million. Yeah, I've already got that one on my list.
This is, and it's not because Anna's with us that I'm saying that. I met Anna Shane 12 years ago. When I met her, she was a chemist. She had very little money. I think she just saved up $2,000, 2,000 euros is all she had. And she's gone from zero to hero in 12 years. She is our top performing trader. So everything she's learned is in that book. It's like 500 pages, but it's really easy read. It's like very big writing for those of us as poor eyesight, but it's full of loads of links to videos and diagrams. So it's got loads of pictures. It's like a picture book. It's like a kid's book because it's got loads of pictures. And people, they say a picture is 1,000 words. So, that book could have been 2,000 words, but she's compressed so much of it into little videos. So I don't think there's any book on the planet that can take you from zero to hero, because she's actually taken you both emotionally from zero to hero, and she's done both the how and the why, the psychology and the system. So it's a fantastic book, and if you get your hands on it, read it as tier 1. So she's written it as beginner level, intermediate level, and advanced level. So you read it as just read the tier 1 information, then go back and read the tier 2 information, then go back and read the tier 3. So she takes you from primary school to secondary school to university. So it's an amazing book. And you're very welcome. And when you do direct comparison between what we do, Shane, and what property people do, we do 10 times better than property. Typically, people will do, depends on how they structure, whether they pay down with cash or pay with finance. Depends whether they do leaseholdings as opposed to ownership. But most people will do, 7, 8, 9, 10, 11, 12% per annum return on investment with property. And we typically do 10 times better than that. So if you know anybody in the property business, there's certainly somebody that would enjoy what we do. A lot of our clients are property investors. And when they see what they come to us like with 10 properties in their portfolio, and then they invest, say, like something small, like 50 grand or 100 grand. And then slowly but surely they start to sell off their properties and put the money in this, because it's 10 times more powerful and it's completely liquid. So something definitely to work. Any of you that are in property should take a closer look and do a comparison between your bottom line results in property versus your bottom line results with us. Any other questions?
Femi.
Yeah, question for me.
Go ahead, Femi.
Hi, Owen. Happy New Year.
Happy New Year too. Good to see you again, sir.
Good to see you, sir. Thanks.
Bawani.
Very well. Fine. Thank you. Thank you. Thank you. You gave the example of Warren Buffett, and you gave the example of putting away 400 every month for how many years? In 10 years,
10 years.
you hit your million. I'm just wondering. I mean, using two examples. Would that be just money in and never money out within that period? I mean, so as Warren be taking money out, and if you put in 400 every month and you want to hit a million in 10 years, will you be taking anything out to say, okay, I need money to go on holiday, I need money for my rent, I need money for this and that, or it's just in and in?
Yeah, it's just in and in. But however, some of our clubs, you're a member of Invincibles. Invincibles is currently doing 9% a month. So if you're in a club or that's doing 9% a month, and you only need 4% to get to your million, you've got 5% to play with. So if you or your club is performing better than 4% a month, that extra 1 or 2% you can use to pay yourself along the way. But yes, it must continue to do 4% a month to get you to a million in 10 years. You're very welcome. Stephanie, you had a question next.
Hi, yeah, thank you so much for that lovely presentation. It was amazing. You made it sound so easy, like absolutely simple easy. and I've got Anna's book so I can have a read. But is it really that easy once you learn? Because it just sounds obvious.
It is that easy. But what I would say to you, Stephanie, is that cast your mind back to when you tried to learn to ride a bicycle or you tried to learn to swim. It seemed really difficult to ride a bicycle. It seemed really difficult to swim. But once you got it, you got it. You can stop. You can not ride a bicycle for 10 years and then just jump on a bicycle and ride again. You can not swim for 10 years and jump into the pool and swim again. This is no different. So by being in an investment club, Stephanie, that's like being on the bicycle and falling off the bicycle and get back on it. Because the club will teach you experientially of how it works. So I know Femi, in a few years' time, he will be confident to do this on his own. He may not want to do it on his own, but he will be confident to do it on his own. So yes, it is easy when you know how.
Thank you very much. Thank you.
You're very welcome. Amanda, you had a question next, I think.
Hi, Owen. Yes, I was just going to say thanks so much for that presentation. Well, as Stephanie just said, you make it so easy and it just feels so accessible when you do it. For me, it wasn't actually a question. I was just going to make an observation. I was surprised, and I don't know why I was surprised, but it struck me as quite unusual that there are only 46,000 companies in the world to invest in. I don't know why, but I had a vision that there would have been far more, a greater number than that. So yeah, no, it's just an observation, really.
Well, let's be clear. Those are 46,000 companies in the public market. There are many thousands of private companies. So you're right. There's way more than 46,000 companies in the world. The only reason that people move from private to public is that, imagine, Amanda, you and I had a company and let's say we made glasses, okay? We made pint glasses. And let's say that we got a massive order from China, that some company in China wants to buy 10 million glasses of us in 6 months' time. We don't have the resources within our company to scale up our production line, buy in the sand. So we actually have to go to the stock market to raise funds to meet the order. And then what we then do is we say, in exchange for your money, Mr. Stock Market, which is full of individuals like me and you invest in the stock market, we are willing to share our profit in the form of a dividend with you. So when I came across the stock market, initially I had negative associations with the stock market because I thought it was a place where people were very cutthroat and very mean and took advantage of everybody. The stock market is actually quite the opposite. The reason why you own a share, the word share means you share in everything. You share in the profit, you share in the dividends of the company. So once you understand that, you then recognize that I could invest in privately held companies or I can invest in publicly traded companies. It is very difficult to get accepted into the stock market. Like, it's very difficult to become accepted in the Premier League. The stock market is exactly the same. You've got to jump through many hoops as a privately held company to get there. So by definition, you are in the creme de la creme by being even in the stock market. And by being in the value line, you're in the creme de la creme de la creme. So very few people understand this, is that if you buy shares in, say, Tesla, for example. Now, Tesla is a bit overvalued right now. It's trading at 80 times earnings. There will be times in the future will be better value. But right now, Elon Musk owns 20% of Tesla. And when you buy shares in Tesla, Elon Musk works for you, because the number one responsibility of a CEO of a company and all of his executives is to maximize shareholder value. So his job is to make sure that while you sleep at night, that he increases your wealth. The only difference between you and Elon is he just owns 20% of the company. You might own a few shares, but you're both on the exact same level. But he actually works for you. So Elon Musk, to be crude about it, in fact, there's a funny story. Anna's son, two sons, are massively into Elon Musk and everything he does. And I remember I said to Anna's son 3 years ago, are you still thinking about working for Elon Musk and, working for Tesla? And he said, I don't think I want to be Elon's bitch, meaning that if you work for Elon, you work really hard. And I said, well, because at this time, Jaime owns shares in Tesla. I says, do you realize Elon is your bitch? And he said, what do you mean? I said, he actually works for you because his job is to maximize your shareholder value. So by you buying the best shares in the world, run by the best people in the world, they actually now work for you. So that's why it's such a powerful thing to do. And I think, Karen, can you remind me, Amanda's in the Golden Circle Club. I think they're currently doing 5% a month, isn't it? I think
4.7, I think it was.
4.7. So there you go. You could afford
Almost 5, yeah.
almost 5. You could afford to pay yourself a 0.7 dividend, and it still won't interfere with your 4% plan to become worth $1 million in 10 years' time.
Brilliant. Brilliant. Thank you, Owen.
You're very welcome.
But not this week, Anna, because we want a bit more, Amanda, because we want a bit more money in the club. We
I
want to
know.
get the million up there.
We're getting there.
Owen, thank you very much. And I really appreciate you stepping in short notice as you did. So thank
Very
you.
welcome.
Yeah, very, very good. Very interesting. And I love this. And the thing to note with the shares is that Owen talked a lot about Warren Buffett, and the thing that really impresses me about Warren Buffett is 95% of his wealth has been generated since he turned 59. And when you think of how much he gives away each year as well, he makes an astounding amount, and that just shows you the power of the compounding effect. Okay, and that's one of the things that is coming out quite a lot today, is how you start off very small and you grow and you grow and you grow. So Owen, thank you very much for that. Like I said, I always love the numbers and looking at them and analyzing them. So really great. Thank you.